गुड इवनिंग एंड वेलकम बैक टू पैसा बोलता है। पैसा बोलता है में फिर से स्वागत है। I have written a book called Ordinary Stocks, Extraordinary Profits, where I have told several times how to identify a stock. In that book, I have discussed several principles explained in the American market by the great master Phil Fisher. Phil Fisher's son Ken Fisher has written a book on how to smell a rat. That is, when you look at a company coming up with a stock issue or an existing publicly traded company, how to smell a rat means how to first sniff a company is a fraud. There are many ways about it. It's too long for me to explain to you in this short 10-minute video. All I can do is read Phil Fisher, Common Stocks, Uncommon Profits. You will get an extraordinary idea of what to do. But in today's video, I am going to talk only about one big issue. Whenever you consider buying a company, the first thing you should do is look at the promoter. Phil Fisher says, if I can leave my wife with the promoter in an island, deserted island, and he will not touch her for years, that is the guy I want to do business with. The house of Tatas, the house of Godrej, TVS are families who have that kind of reputation. There are many other businessmen who have stellar reputations. But reputation is earned over a lifetime and can be destroyed immediately. You should understand the business model, you should know your circle of competence, and you should then invest. I am going to talk about two companies in one of which SEBI has issued a show cause notice and found grave irregularities. For people like me, we can see this coming 80,000 feet away. This is because the business in which they are indulging in does not require so much capital. This is because the business in which they are indulging does not require great capital. It is cash flow positive and self-sustaining. The first company I'm going to talk about is Brighton Group. This was considered a great star and it was pumped and dumped by many stockbrokers, especially reputed ones. If you don't know what is pump and dump, then you should see a movie called Wolf of Wall Street. In that, there is a star who also acted in Titanic called Leonardo DiCaprio. He will clearly explain to you how this works. Brighton Group was a classic pump and dump stock. They plan to be in digital advertising and ad technology, both of which does not require major capital infusion. Basically, if you are trying to do digital advertisement, you need Google advertisement is more than enough. Anything else is a cock and bull story. Largely, this company claimed they have offices all over the world, in Latin America, in Israel, and in US. It's very easy to set up subsidiary companies in all these places with very small capital. They hyped the issue, they went with an IPO. And what SEBI has found is out of 34 quarters they have declared results. In 31 quarters, there was a malware. The results were manipulated. The initial complaint about this company is they claimed to have intangible assets and they had capitalized it. If the capitalization had been disallowed by the auditors at correct time, this company would have made big losses. They manipulated the results, declared profits, and artificially pumped up the stocks. The promoter holdings, which was at 42%, continuously declined to this point where it is now 3.5%. The stock went up as high as 96 rupees and has come down to 15 rupees. The promoters have made a lot of money and the retail investor is the guy who has lost it. The name of the company itself should have sent alarm bells. This is a typical English name. When an Indian company sets up an English name, it is straight away to defraud the retail investor. The second thing that should have rung alarm bells is an advertisement company going public in India should have set the second alarm bells ringing. Third, a company which does not enormous free cash flow and is capitalizing intangible assets. You should have avoided this company. In private meetings, I have always said this company is to be avoided by a huge barge pull. Don't go anywhere near this company. I have been proved right. The promoters of this company are Mr. Reddy, who is supposedly from IIT Kharagpur Mechanical Engineering and a master's degree abroad. There is another gentleman called Vijay who did his basic engineering in the Jawaharlal Nehru Institute of Technology, Hyderabad, and again had a master's degree in Louisville, US. Gullible retail investor got carried away. SEBI has now woken up, issued a show cause notice, and is probing the issue and found several irregularities. The cases like Satyam will drag on forever, but at least Satyam had some intrinsic value. It could be rescued, taken over by a professional management group, sold to Tech Mahindra, and today has given at least some money back to the shareholders. Whereas in this case, there is nothing. Nobody will buy this company. You will have to prosecute the promoters and you are not going to get anything out of it. Another company, Indian company based in Madras, which listed in US, has been charged of doing exactly the same thing, misleading the retail investor in the United States with forward-looking statements of growth. 2 suits have been filed in America by 2 retail investors accusing this company of misleading retail clients. American markets regulators are very tough and there will be a strong investigation and penal action against this company if found guilty. I am not saying they are guilty, if found guilty, and we have to see whether the US courts allow us a trial by jury. A trial by jury can sink this company and the accused are the board of directors. Even in this company, there were several warnings. When a chief executive of a company goes around telling you that a superstar, a movie actor is my spiritual teacher, you should have woken up. This company has never made a profit. The company kept on expanding on VC money. VC money was cheaply available because of the loose monetary policy, and after IPO the losses have widened and there is no notion of profits, and the stock was freely distributed like chocolate among all employees, and the stock listed at $35 went up as high as 43. Some of these employees were my clients. I told them to sell, they didn't. It has now come down to $13.9. If you are smart, you will sell now. It will drop further. All these kind of people give you several warning signs. The fact that a man says a cinema star who has never run a business is my spiritual teacher and I am inspired by him should have sent your alarm bells ringing. I can understand if he had said Bill Gates is my hero, or the founder of LinkedIn, or the founder of Netflix, or the founder of Salesforce, which is also a software as a service, Eric Berney as my guru. I can understand this. But leaving all that, you claim a man to be your teacher who has no understanding of software and say that I will do well is a joke. And when he ferried his dog to New York, then you know the answer. He is laughing all the way to the bank. It is your money which is lost. Thank you for watching Paisa Bolta Hai. If you like this content, hit the like button of our video, turn on the bell notification, and please subscribe to our channel. If you do not turn on the bell notification, you will miss out any video we put out. Once again, I thank you for your support for Paisa Bolta Hai and urge you to share this video with your friends and relatives. Thank you once again.